dollar's usage declining quite rapidly on these developments. So where does that leave the dollar? Well, it's the end of the fiat currency system. I mean, that's what we're seeing. All we don't know is the precise timing. But everything we see rather suggests it's going to happen sooner rather than later. So where does that leave gold? Well, wake up, folks. This is beginning to happen now. And I really can't see how this one's going to be resolved without many, many eggs being broken.
Alasdair Macleod explains that central banks have long hoarded gold and are unlikely to return to a true gold standard, meaning liquidity in the gold market will remain tight. He highlights China's massive household savings, around 30%, or $5 trillion annually, fueling strong investment demand. Macleod dismisses Western macroeconomic models as unreliable and praises China's practical economic management. He notes that China, through the BRICS and Shanghai Cooperation Organization, is building a gold-based trade network with vaults in places like Hong Kong, Saudi Arabia, and possibly India. This system allows nations to settle trade in yuan or gold, bypassing the US dollar and reducing global reliance on it. He concludes that these developments mark the accelerating decline of the fiat currency system and the rising dominance of gold in global finance.
Whether you're even going to get the liquidity over there, I mean, basically, the history, if you like, I mean, the more recent history, following our very successful gold standard, back in the 19th century, the history of the 20th century is that central banks grab the gold and they won't part with it at all. The idea that they're actually going to go on a gold standard and, say to all comers, we'll exchange our currency at a rate which is as follows. And, if you're not happy with our paper, then come and exchange it. I think we're an awful long way from returning to those days. You're not going to get liquidity being released from the market. I think that's the key thing. And the reason I mention household savings is that, these guys are just as human as you and me. They see something going up and they chase it. They're not going to say, oh, thank God, I could make a bit of a profit here. Unlike some of our Western investors, take a rather different view. Just let the figures sink in for a moment. If you're talking about 30% household savings rate, you are talking about $5 trillion a year seeking an investment.
Mm-hmm.
How do you accommodate that? I mean, the Chinese economy has been growing pretty well. I don't buy into government analysis of these things and macroeconomics. It's a load of rubbish. It gives you no idea exactly how things are really performing in China. But I'm sure that some of that would be in capital investment. Is bound to be. I mean, because the economy works there, it works pretty well. I mean, much as our macroeconomic analysts in the West hate it, they hate this proof that they're wrong. But what the Chinese are now doing, and this is fascinating because having cornered the market, they're now saying to their friends, that's not us, by the way. I'm talking about the Shanghai Cooperation Organization and also BRICS. They're saying to them, look, we're opening vaults, SGE vaults, Hong Kong, Saudi Arabia. I heard, I saw something yesterday, India. I can't substantiate that, but it wouldn't surprise me at all. And also throughout Southeast Asia, there will be exchange facilities whereby you can swap Chinese yuan for gold and vice versa. The only thing we don't have is the rate at which it might be fixed in the future. But you can see that they're setting up a network, if you like, for governmental settlements. This is not going to be available to citizens, I believe. I don't think so. I can't see it. But it will be available for governments settling their trade imbalances. And I think the point about it is that it will make the yuan attractive, if you like, as a foreign currency. The other thing is that they are setting up a process whereby if you're going to, let's say, sell South African rand to buy Indian rupees, At the moment, you have to sell your rand to buy dollars, sell the dollars to buy rupees. They're cutting that out completely.
Mm-hmm.
This is going to release foreign exchange commitments, which, according to the Bank of International Settlements, they reckon is around about $80 trillion. We're talking about the dollar's usage declining quite rapidly on these developments. So where does that leave the dollar? Well, it's the end of the fiat currency system. I mean, that's what we're seeing. All we don't know is the precise timing. But everything we see rather suggests it's going to happen sooner rather than later. So where does that leave gold? Well, wake up, folks. This is beginning to happen now. And I really can't see how this one's going to be resolved without many, many eggs being broken.
Alasdair Macleod warns that the global financial system is approaching the end of the paper-based era, as confidence in fiat currencies continues to erode. He explains that paper gold, financial contracts, and derivatives are merely credit instruments, not backed by real metal. These paper promises hold value only as long as counterparties remain solvent, but once the fiat system collapses under its own weight, he believes they will become worthless. Macleod argues that China has effectively cornered the physical gold market, securing real assets while the West remains overly reliant on paper claims. This, he suggests, marks a power shift toward tangible wealth and away from financialized speculation. He then criticizes the World Gold Council and the London Bullion Market Association, LBMA, for focusing on bureaucratic initiatives like registering every gold bar and digitizing gold efforts he dismisses as PC stuff and buzzword-driven distractions. To him, these institutions have lost touch with reality, catering to fund managers rather than understanding the true dynamics of the physical gold market. Although he acknowledges that the Council's statistical work on ETFs and historical pricing can be useful, Macleod believes that Western financial institutions are no longer fit for purpose. They fail to grasp the fundamental transition underway, from paper promises to physical assets, and anyone relying on their outdated frameworks is making a grave mistake. In his words, this transformation will not occur without many, many eggs being broken, signaling the disruptive and painful nature of the coming monetary reset.
Because really what we're looking at is the demise of the paper system. Because people are beginning to understand why you should hold gold. And as I say, China has basically cornered the market. Call it the physical market. They've cornered that in effect. So where does that leave paper? Well, I mean, paper's just a bunch of promises with nothing to back it. It's not gold. It's credit. And, it's credit which, so long as the counterparties are solid, then you could say that the paper is a gold substitute. But when we see the fiat currency system coming under huge pressure and looking at the end of the whole fiat currency system, then all these paper promises are going to turn out to be worthless. And I was talking about the World Gold Council. I was slightly amused. I mean, I think they've rather lost the plot. Either that or I've lost the plot. It's quite possible. I think what basically, they've been working with the LBMA to get every bar registered, and this is just PC stuff. I mean, what's China going to say about this? I think there's an old-fashioned Churchillian expression, something like that, but the other way around. And where's all the gold? Well, it's flown. And then the latest thing was the World Gold Council saying, we're going to digitize it, which I think is a sort of buzzword, and I sort of think, they really haven't got the plot at all. The idea of digitizing it, I mean, but you see, to be fair to them, they're looking at a market which is exclusively the investment management industry. And so, they're trying to think like investment managers, which is the wrong way to think. I mean, they've missed that boat completely. So I think the whole thing is that it's a bit of a farce, really. I mean, don't get me wrong. I do like a lot of what the World Gold Council does. I mean, particularly its work on statistics and things like that, which we know are incomplete, but their statistical stuff can be extremely useful. For example, they collect very detailed statistics on ETFs, that sort of thing. They're also, now that you can't get daily fixes without having to pay some horrendous amount of money to someone or other, they've stopped even doing that. But you've still got prices going back to 1978. I actually managed to go back further than that, but that's because I'm a bit weird, I think. But it's our institutions. I mean, the broader point is that our institutions are no longer fit for purpose in this market. And anyone who's guided by them is making a horrid mistake. I really do think so.
Alasdair Macleod explains that central banks have historically hoarded gold, making a return to a true gold standard unlikely. He highlights China's growing dominance in the physical gold market and its creation of yuan gold exchange systems across Asia, the Middle East, and BRICS nations to facilitate trade settlements without the US dollar. This network, he argues, will accelerate the dollar's decline and mark the approaching end of the fiat currency system. As faith in paper assets fades, physical gold is becoming the preferred store of value. Macleod also criticizes institutions like the World Gold Council for focusing on superficial initiatives like digitizing gold, saying they misunderstand the market's shift toward tangible assets. He concludes that Western financial institutions are out of touch and that gold will play a central role in the next monetary era.